My, Tesla is getting smacked. Down over 50% from the highs, so what's going on? Do we need to be typing F's in the chat for the Tesla bulls, or is this okay? Is this gonna get better? Well, that's what we're gonna talk about in this video, how to play Tesla, because I'm actually still in Tesla, because it's one of the positions in the NASDAQ All-Stars, which is a trading system I use. We made a lot of good money on Tesla. Still got a little bit of a position left. And by the way, All-Stars is open right now, closes Sunday. Definitely check it out before then, because this is a key time to be using a system like this. Link down below in the description and comments. Okay, so the last time I talked about Tesla was when it formed this consolidation. And it formed this consolidation after, it ran up like 250% since last year. Even more, maybe 260. And I drew this little beautiful triangle, because good trading is all about making good shapes, really. And I went to Montessori where they taught me the best shapes. Hence why now I'm the best trader. No, I'm not, but I do know enough to know that this was a significant consolidation. And I was impressed back here because there was a lot of strong hands. My original bet was that Tesla was gonna spike up here and then turn around and collapse, but it did not. It consolidated sideways, meaning people were really into it. They weren't about to let it go. And then right here on the 14th, that Friday, we got the announcement, the secondary offering announcement, which you really got to hand it to Elon. Like, what a genius move. He pretty much offered new shares and raised money right at the top. We made a video about that too, where we recommended that he do raise, because the time to raise money is when you can, not when you need to. And we knew how extended this bull market was. It could turn at any second. And what happened to WeWork and these other IPOs for these high-flying tech companies, things were already getting a little dicey. So collect the money while you can. He did it. So after he did that, I really expected the stock to break lower, but no, it actually broke higher, and that's rare. You dilute shares and everyone's happy about it. It popped and popped again. And then the market turned. And now here we are, down 50% from those highs. And when it actually broke higher, I was saying that if you're a discretionary trader, that might have been a time to buy, because that was such a strong signal. But then when the market started turning, that was the clear signal that no, it is time to distance yourself from a stock like Tesla. The thesis changed. The price action changed. The thesis changed because the market conditions changed and the price action changed. And 50% of a stock's move is based on the broader index. So when you're seeing action like this, you can't really expect a high flyer like Tesla to stay up. And even right now, as I'm recording it, it's down another 16%. So it's really taking huge hits where other high flying momentum names aren't getting hit as bad. Now, of course, these are unprecedented times. It's going to be tough for most stocks. And more than being in the best winners, you're trying to be in the stocks that lose the least, or just stay in cash. So going forward, considering this whole coronavirus thing and the fact that we're in a bear market now and we're almost certainly going to be in a recession, companies like Tesla are not going to do so well. Now, first thing, you got to put aside how you feel about Elon and how great Tesla is. I'm a big fan too, but this is more about your money. And it's fine to be a fan, right, of a company, but that doesn't mean you got to lose money on it, because your money is going to be dependent on the stock price. And stock prices don't always equate to the actual value of a company. It's all subjective and it's based off sentiment, emotions, it's crazy. So you got to be able to determine the type of market that you're in. So previously, just a few weeks ago, do you even remember that? It feels so long ago. But back then, everyone was excited about stupid companies like WeWork. Well, WeWork is, even earlier than that. But my point is that there was a lot more leeway given to some of these companies. Like in that type of market with that type of sentiment, Tesla could be valued many times more than the old school car companies like Chrysler, GM, Ford, those guys, even though it's much smaller. So if you ask like a value guy about Tesla, of course they're going to say, oh, it was way overvalued. But a problem that a lot of strict fundamental guys have is that they don't read the general market sentiment. So now, as we move into a recession, we're moving into a different type of market. And in this market, the general sentiment is not like, oh, the sky's the limit, let's go to Mars and do all these amazing things. Instead, it shifts to, hey, what's your cash flow like? Hey, how's your balance sheet? Hey, are you about to survive this recession that we're going to go through? Now, I don't think Tesla is going to go out of business during a recession. I think they've done a great job cementing their place. And like I said, that capital raised by Elon was genius, because now they have that money to try and carry them through. I think he kind of saw what was coming, because honestly, in this market, we didn't get the whole euphoric top in the general market anyway, but we did see it in other places, like in Tesla. Tesla was actually, the way it shot up was euphoria. So Elon, if he was watching that, I know he's like, well, this is way overvalued, but he took advantage of it. So I definitely think Tesla survives, but its stock price is going to drop a lot, and I think it's going to be dead for a long time, especially if we're facing a 6 to 12 month recession. So if I was a discretionary trader, I'd be getting out of it and not touching it. But as a systems trader, I actually still have a position in it. The NASDAQ All-Stars that I always talk about made a lot of money on Tesla on that huge run up. And the beautiful thing about it is that we locked in a lot of those profits before everything turned. That's the great thing about having a system. I can show you how we did it right here. So on November 1st, we entered Tesla. This was after their huge earnings announcement. And honestly, after that huge jump that they had after earnings, I was like, really? Are we going to enter right now? And that happens, right? My system tells me something. It's a momentum system. It's supposed to tell me the best stocks that are going to go higher. But after I see an earnings jump like the one it had, I was a little nervous. Like, isn't the move already over? But if you're trading a system, you listen to the system because it's back tested and you know how it performs over a full cycle. And you don't want to screw that full cycle up by not taking the trades properly. So I got in on 11.1. And as we all know, it worked out pretty well. So the thing rocketed higher. But on the way up, you can see these targets right here. We were taking profits the whole way. So our first target was a 20% gain from where we entered. And we hit that right here on December 16th. And once we hit that first target, what we did was sell 25% of our position. So to make it easy, say I bought 100 shares right here on November 1st. Well, here on December 16th, I sold 25 shares and I locked in that 20% gain. And that's what we actually continue to do at each target. Keep selling 25 shares or 25%. So our next target was at 35%. And right there, we sold another 25 shares. So at this point, at target 1, we sold 25, so we had 75 shares left. At target 2, we sold another 25 shares, so we had 50 shares left. And target 3 was a 65% gain from where we entered. And what do we do there? You guessed it, sold another 25. So by that point, by target 3, we only had 25 shares left, or 25% of our position. And why were we taking profits on the way up? Well, it's the same reason why Elon raised money when his stock price was so high. He was kind of taking profits in a sense too, because the time to take profits is when the stock is going up, not when it's turning around. You got to pull some chips off the table in the good times. Same thing I was saying before, for all these companies that need to raise money, the time to raise it is when you can, not when you need to. See how it all relates? Investing across any type of investing. Amazing. So by this point, we still had a 25 share position and the thing kept running. It was crazy, right? And after that target 3, we actually don't have a final target. We'll keep that position on until the momentum dies down in Tesla or, whatever stock we're in. So either the momentum dies down and we rotate into something that has more momentum, or we get stopped out, which is what is about to happen with these last few shares that I have. Because here's another thing that we do that makes the system so effective is that every time we hit a new target, we raise our stop level, meaning the level that we will exit. So when we first enter, we put a stop 15% below our entry point. But then when we hit the first target in one of our stocks, we raise that stop from that 15% below the entry to the entry level. So that way, say we sold our 25 shares right here, say the other 75 turned around and went lower, well, we would sell it right at break even so that we would still be net positive on that trade. And I mean, how many times has it happened to you where you're in a good trade, it shoots up and then you don't sell at the right time, so all of a sudden it round trips all the way back down. And not only do you lose all your profits, but it turns into a loser. Used to happen to me all the time. And I can bet you it happened to a lot of people in Tesla. And if I didn't have the system, it would have happened to me in Tesla too. But yeah, we keep doing that. So after we hit target 2, we move our stop up to target 1. Hit target 3, move our stop up to target 2. And then after target 3, because we don't have a final target, we just let it ride, our final stop remains at target 2 down here, which is why I'm about to get knocked out. It's around 440 or so, which Tesla is definitely going to hit and I'll get knocked out. And I say definitely like I know it's going to hit that point, but I don't know, which is why I haven't sold already, because you don't sell early like that. That's the whole point of a system, is following it so you get the full cycle results, because a good system is back tested through multiple periods, good times and bad times. And you throw away your opinions and your emotions and follow that, like real quantitative data. Now you might be looking at this and thinking that's a lot of money to lose on the last bit of shares. And yeah, I don't disagree with you. When I look at this, I'm like, why don't we just use a trailing stop? Like a 20-day moving average or something, even the 50-day, because then we would have gotten out up here instead of all the way down here and we would have had more profit. But this is also where the back testing comes in for a system, because you can try different trading rules and then you see which works the best over this large amount of cases. And by cases, I mean like different stocks. So in our case, when we back tested the All-Stars, we found that it works better overall over a full cycle when you're not using a trailing stop and instead using that second target as a stop. And one of the considerations when you're building a system is that you don't want to over optimize it to one single case. Like, I can't build a whole system based off what just happened in Tesla, because first of all, I mean, Tesla is the worst thing to build a system around because that was such an outlier event. Stocks don't run up all the time like Tesla does. It's rare. But say if I did try to optimize the Tesla, then it might screw up my total system because the system loses robustness. And if a system is robust, it means it needs to survive in different market types. You need to make sure that your rules keep working. And that's another reason why I like the All-Stars as a system, because it's a momentum system. And the concept of momentum is very robust. Momentum has worked forever, and it will continue to work in any financial market during any time. And of course, sometimes it works better than others because in a full cycle, system is going to perform in different ways. But you just got to make sure that you don't blow up and that your risk control is in place. So will we eventually be back in Tesla with the All-Stars? Yeah, probably. But I think it's going to be a long time because Tesla had its big run. It's going to take a while of consolidation before it happens again. And in the meantime, other stocks are going to take that place for the All-Stars because the All-Stars is investing in the top 5 highest momentum stocks that are going to do the best. And as we rotate into a different type of market, it's not going to be the same tech stocks as before. But like I said, we made a lot of money on Tesla, and more than that, we kept a lot of that money because we had the risk control and profit taking and all of that in place. Not just like it, because this one is pretty unique, but it's been tested enough to know that it could take the volatility and keep us safe. And right now the system is in a lot of cash. It has a lot of dry powder just waiting to deploy. But of course, we're going to wait until the markets are turning around, until there is opportunity. But for someone who isn't using this system, now's a great time to get in because you could learn it and be ready for when the market does turn around. And from results we've seen in the past, when you get a bad year, the next year, the next year is super sweet. When the market rebounds, that's when you want to be in the highest momentum stocks, especially. So it's a great time to sign up, and you should do that before Sunday because we're closing it. And remember, there's a link down below in the description and comments. So if the All-Stars model doesn't produce a positive return in your year of being a member, then you can request it. Your next year is free. So it's really low risk. Check that out. Closes Sunday. Link down below in the description and comments. And if you haven't already, make sure you subscribe to this channel and hit that notification bell so you get an email notification of all our new videos. We're publishing a lot, especially during this market crisis time. Subscribe, and I'll see you in the next one. Stay fallible out there. Bye.